3 months into Trump's second term, Trump's administration faced challenges on two fronts. Externally, a trade war with China. Internally, tension with judicial branch. The ongoing tariff war is causing market to anticipate a lower trade deficit in US in the future, which means there will be less supply of dollar globally, leading to a significant capital outflow from the US assets. The US dollar index has fallen sharply to a new 3-year low. On the other hand, euro has surged to 3-year high, driven by expectations of an increased European trade deficit, which means in the future there will be more supply of euro to the global market, and in turn a lot of that euro will be recycled back to Europe. The increase in Europe trade deficit in the future is caused by Europe having to absorb the surplus Chinese exports previously intended for US. In another word, Europe will be importing deflation from China. Investors are also shifting capital into other non-US assets, for example gold. Gold has reached a record high of $3,373 per ounce. China and other countries has benefited from this spike in gold price because they have been buying gold for the past few decades. China has officially reported having a gold reserve of 2,292 tons. However, the actual gold reserve in China may be significantly higher, possibly over 5,000 tons, due to undisclosed gold purchases. Bitcoin has also surged upward, currently trading at $87,000 per Bitcoin. Both gold and Bitcoins are benefiting from the capital outflow from US, as investors are seeking alternative assets, and both gold and Bitcoin are not US assets. Tom Lee, despite a wrong call before the Liberation Day, which saw a $5 trillion wiped out in 2 trading days, is now making another bullish prediction. He labeled the current market environment as peak uncertainty. He believes that the market has already bottomed with S&P at 4,800, citing extreme VIX spike to 60 that happened on April 8th is going to be very hard to be surpassed. He also expects US companies to show resilience during the upcoming earnings season. He also anticipates positive policy surprise, referencing Trump's ongoing 90-day negotiation effort with 15 active talks currently underway, meaning in the future there will be possibly good news coming out about US making trade deals with certain countries, and all those will be positive shocks to the US stock market. While the US is experiencing capital outflow, China is also facing significant economic challenges. The US accounts for 15% of total Chinese export. Although seems modest, it surpassed China's next trading partner, excluding Hong Kong. That'll be Japan, with a total export of 4.8%. So since 2023, China has been battling a persistent deflation crisis. Given these conditions, it's uncertain how long Chinese economy is going to last, with the increased trade pressure and decoupling pressure from US. Besides external conflicts, Trump is also simultaneously fighting an internal battle with the judicial branch. His administration ignored a district judge's order to halt deportation of Venezuelan migrants. Trump continues to publicly challenge Federal Reserve Chair Jerome Powell. On Monday, Trump on social media criticized Powell for not recognizing that there is virtually no inflation and warned of economic slowdown risks without rate cuts. Trump's ongoing attack suggests an attempt on undermining Federal Reserve's independence. On April 18th, National Economic Council director said the president and his team will continue to study that whether removing Powell is an option. The Federal Reserve Act of 1913 protects Federal Reserve's independence. The president can only remove chair for misconduct or incapacity, not policy disagreement. And historically speaking, no president has ever removed a Fed chair. Since he is challenging the judicial authority, Trump may still try to remove Powell. If a judge tries to stop him, he might just ignore the ruling and do it anyways. Trump's supporter claims Powell is politically biased, criticizing Trump's tariff while maintaining a silence on Biden's large-scale fiscal spending, although both of these actions have monetary implications. Trump supporter also questions why US government cannot directly influence monetary policy similar to the Chinese government's control over its central bank. There has been reports indicating China's sovereignty wealth fund has been buying stocks to support the stock market during US-China trade war. Chinese stock exchanges has also reportedly been restricting daily stock sales to prevent sharp decline. These measures has helped Chinese stock market to appear stable and avoid major sell-offs amid trade tensions. Trump policy supporters argue that US government should also have control over its central bank, similar to China's model. Federal Reserve should also be pumping liquidity into US equity market, creating a similar stability. Chicago Fed Gooseby warned against undermining monetary independence, saying it would damage Fed's credibility. I think it's not only the Fed's credibility that's damaged, but also the US dollar as a global reserve currency status. The US dollar's strength doesn't come from intrinsic value. US dollar has no intrinsic value because it's no longer linked to gold. But people still believe in US dollar because they believe in United States as a country that's governed by rule of law, and it's a country with credible institutions and independent central bank. If Trump replaces Powell with a puppet, that would undermine the trust in the United States, and it would also raise the long-term inflation expectation, which would put US in a risky economic position. Some are pointing to China's lack of central bank independence without inflation issues, but that system requires extreme government discipline. The question is, does the current administration have that sort of discipline? Countries like Turkey, Argentina, Sri Lanka has shown how lack of discipline plus an unindependent central bank would lead to runaway inflation. Giving full monetary control to the executive branch risks abuses. As government naturally want to spend money, if the government also is given a money printer, they will likely to overprint and overspend. If Trump replaces Powell with a puppet, it would trigger more capital outflow from the US, which means the equity market would decline further, US dollar will weaken further, treasury yields will rise further, because it would accelerate the erosion of US dollar's reserve currency status, accelerate the de-dollarization.